there was a market structure shift. I hope you are seeing this. I'll just have to write new ones. There was a market structure shift here, and the prices retraced back below the 50% again. These are the things that you'll have to be doing them many times. The market structure shift happened here. Sell side liquidity has been taken. There's an order block. Prices are below 50% now. You can see evidently price is below 50% here, and again using our model, price is also below 50%. Below the 50%, there's a fair value gap, and after mitigating the fair value gap, just on the 25%, we found a displacement higher, a retracement lower again to the fair value gap, and we left energetically. So the risk is from here. I'll just show you. You know, I'm showing you where to place the stop loss. You know, I understand how boring this thing can become, because that's why I prefer marking the charts before explaining it to you, because it now makes things easier. But marking while explaining, it now becomes challenging even on my part, because these things are confusing. So here is where we place our stop loss, and you mark it. Stop loss. It's a measured move, and you have to accept this stop loss. So once the market is below 50% of our new dealing range, now you enter below 50%. You enter. You are entering shorts, my friend. You are entering shorts. I mean buys. You are entering buys. So you buy below it. The stop loss, you pay yourself maybe above here. This buy side liquidity again. This one. You can decide to pay yourself here. No offense. Then you again pay yourself at 161.8. I hope you are seeing it here, and you can see price hit successfully. And now the buy side liquidity that was resting above here, the bigger one now, the bigger buy side liquidity. You also have to consider the bigger one, because you are intraday trading, and this was the high of the day, the low of the day. At equilibrium, displaced above the daily open. Market structure shift, fair value gap, order block. Let me mark it out so that you can see. There are some people that don't see and don't listen, and they don't go and practice these things on their own charts. They just watch, then go into live markets to try and make money, and they lose. So here is the order block. The order block can be seen here evidently. Let me just mark it out. The red line here It's an order block. These things, imagine, it can happen consistently. They can. So our kill zone starts at 8 then to 11 o'clock. So let us just divide it into 3. Let me tell you something. You know, prices are driven algorithmically. So it's also possible to predict each and every candlestick. But to make money, you'll have to now predict the daily candlesticks, the weekly candlesticks, the monthly candlesticks, the yearly candlesticks. If you can be able to predict the yearly candlesticks and the monthly candlesticks and the weekly candlesticks, even the 4-hour candlesticks also do pay. Even the 1 minute, the 5 minutes, they all do pay. It all depends with your personality. So at 8 o'clock, the OB is the one above here, not the one below it. This one is the order block, the dotted line. The bold one beneath it is the 4-hour open now, and our kill zone open, and our 4-hour opened and pushed higher, taking out buy side liquidity, creating a market social shift. Let me just mark it. There we go. Here is the market social shift. And a fair value gap was created. Let me remove this one so that to see the fair value gap. Here is the fair value gap. This is the fair value gap that was caused by the displacement higher. This is an order block on the fair value gap, an order block on the fair value gap. This is what I'm telling you, that prices are fractal. Prices are fractal. What is happening on the 5 minutes chart is the same thing that will happen on the 2 minutes chart, or the 1 minute time chart as we go higher. It will happen that way until we take out the buy side liquidity, or until we reach our objective. Is when the prices will start doing the opposite of what it was doing while it was going up. So it's just psychology. That's now psychology. So it took sell side here. Let me just remove it. As you can see, it took sell side liquidity here. So these are very nice things, man. These are very nice things. It took out sell side liquidity here. This is on a 2 minute time frame. We are now reading the meandering that was happening on the hourly chart. I hope you saw the meandering that was happening. The prices are very strong. They are very strong, but these are on an equilibrium, 50%. It's on an equilibrium. That's why the prices are meandering around as if they don't want to go up. But this confirmation of the displacement and the order block and the fair value gap, you enter. You enter. Your stop loss, you must define it from measuring this. Let's just measure it. This is an intense one. So we want to measure our stop loss and our targets as we go. This model is universal. You can use it on each and every time frame. As you can see, we are just using the same thing. Our tool, the Fibonacci retracement tool. That's what we are using. There is no other magic. I want to place the stop loss now. This is a trade you can take while bored, don't have anything to do. You can take this trade. Let me place a stop loss here so that you can see. The stop loss is the dotted line below here. Prices displaced, order block, fair value gap, then a movement lower. They mitigated the fair value gap and the order block, and also displaced, causing a fair value gap here. You can see the fair value gap, a small one. This one from here. Let me just draw a line there so that you can see. And this is what is happening on a daily basis. So the precision is dangerous. This kind of precision is something that I've never read it in any book. Quick Capital Connect, it's a company that deals with several services. The company deals with the financial market analysis, what we are doing now. It deals with the project management, and project management will also be explained to you so that you understand how we offer it and how it can benefit you as the investor in our company. We'll also take you through business analysis, and we'll also share what we do offer on that service for you to understand also our business models. So things are getting clear now. As you can see, imagine this on a 1 minute time, on a 2 minute time frame. If we drop lower on a 1, you will now see better things. Let's go to a 1. On our 1 minute time frame, the market such a shift. Let me just you can see how boring it is. So the market such a shift happened here. And then you can see the fair value gap. You can see the fair value gap. It is here. The order block. This is on a 1 minute time frame. Now you can see things now much better. And it's happening. All of this is happening on our kill zone. All of this. Our kill zone is from 8 o'clock to 11 o'clock. That's where our kill zone is located. So we took out sell side liquidity. There is also buy side liquidity resting here, but that's not important. Where can I put this thing? Let me put it here, but it's distracting. But it has to be there. So we have taken, we took sell side liquidity. Then you can see the energetic movement higher. I hope you are seeing it. Just see this energetic movement. Just see it. It's energetic. It has displaced higher and breaking the market structure shift. Then we came lower, the order block and the bigger fair value gap of the minute 2. Then boom, displaced again. This one. Displaced again, fair value gap. This one you can see, and you can see this candle that I've formed here. It's called an engulfing candlestick. I have heard people talking about, though there's nothing here that is based on the analysis is based on the names of candlesticks. No. It's just basic market structure and relying on the openings of the daily, weekly, monthly, 4 hour, and what have you. So this is the daily open. Let me just write it here so that you can see. This is the daily open. The daily opened on this red line here. And after what's happening here on the chart, on our kill zone, this is an ATM machine. I'm just telling you for free, and I'm giving you the machine. I'm handing over the machine to you for free. So the sell side was taken below here. That's where the sell side was. Let me like that. This is where the sell side liquidity is. It has been taken. On our kill zone, displacement, I have already explained here. I don't want to repeat. This order block is the one here. The dotted line is the order block. You can see the reaction. You can see the candlestick that came off it. Very fast. Poop. 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 So this is the second hour of the 4 hour open. You mark each and every one. So 9 opened, displaced higher, causing a market structure shift. A smaller one. This was the bigger one. So we are now dealing with smaller. The prices are being divided into smaller things called fractals. You see, that's why what has happened here on the bigger picture is now happening here on a smaller picture, and as we go by. So this is a fair value gap, and you can see the resistance, or is it the resistance? It's resisting. Resist. Support. So this one is supporting price higher because we've broken the structure to the upside, causing the market structure shift. Let me write it there so that you can see. Go to the point, Mash. Go to the point. The point is you are not listening, my brother. You are not listening. So this is the market structure shift that was caused. A fair value gap. You can see the support from the daily open because prices is displaced higher, so it has been support. Just see the support causing an engulfing candlestick and engulfing all this bullshit over here, and it went higher. So you buy here. This is another setup. This is another setup. So this was the buy. You could have bought here and placed your stop loss and moved away from the marketplace. But I'm just talking to those who missed this opportunity here. They missed it. They missed this. They didn't understand what price was doing, and they had nothing to do with it. They didn't know there was an order block here. They didn't see this fair value gap. Now I want to show them another fair value gap, another market structure shift, and another order block. I want to show them so that they see. So these 3 consecutive candlesticks to the downside, this one here. This is an order block. This smaller thing here is an order block. It's an order block. Just see how powerful this area is. I can see, you can now feel the feeling. There's a feeling now that is coming inside you that must be fulfilling. That's how success now shows up. Because this is a daily open. Here is an order block, a fair value gap, and there is a market structure shift that has happened. Just after this candlestick opened, the 9 a.m. also opened exactly at where the daily open was. So the resistance that is here is very, very high, very, very high. And as you and when you measure this, what is happening here, you will now see the stop loss. Let us measure. So I'm just showing you how price can be fractal, and there are setups all over. We have come from our 1 time frame, and we are now on the minute 1 time frame, and I'm showing you how you can even trade these smaller movements as you maximize on your bigger one. But now this requires a lot more patience. This requires a lot more focus. This is not for a beginner. The kind of thing that I'm showing you here is not something a beginner can do. Very, very technical, and it requires a great focus of skill to do this, what I'm showing you here. So you buy after hitting the daily open and the order block and the hourly open and the fair value gap. Just see, you buy. You do what? You buy. You buy as many as you can, because you have done your analysis part of it, and you trust the setup, you trust the system, and you trust everything is presenting. There's an order block, there's a daily open, our 1 open, a 9 a.m. open, and a fair value gap, and a market structure shift. This just because maybe you missed the setups below the 50%. This one, let's say you missed this one. Now that's the reason I'm explaining to you how you can consistently find the setups. The bulls one, you can find them on a consistent manner. That's what I'm showing you here. I'm just trying to prove to you that it's possible and it can be done. So after buying here, your stop loss you also measure from 0 to 25. From 0 to 25, that's where we place our stop loss. You know, silence is also very nice, because I know you are now internalizing what I've been teaching you over here. This is the stop loss. Let us just make it a dashed line so that people can see. So you can see how boring these stuffs are, and this, imagine, it's what you'll be doing on a daily basis. So the stop loss, you place it here. Let me just write another one. I don't want to disrupt the charts. I want to make them as dirty as possible, so that you must go and find out on yourself. I don't want to feed you everything. So this is the stop loss. The stop loss placed, then the buys, you can see they are very snipers, they are very nice. First target, buy side liquidity. Second target, 161.8, you can see. Then the third target, 261.8. So you are paying yourself there. Let me show you how you pay yourself. You pay yourself over here, buy side liquidity, you pay. Then you pay yourself after we hit 161.8, you pay. Then you pay yourself after we hit 261.8, you pay. So basically, I've just shown you a model that is universal, and this is the model that, this is the machine that we are going to find in the marketplace. This is the only thing you're going to be looking for in this marketplace. There is no other thing that's beyond this that you will see. This is the ATM machine that I'm giving you for free. I'm giving you wholeheartedly, and let me tell you, for those guys who will really listen and go back into their charts and backtest and just follow the level, the kind of precision I'm showing you on these charts, let me tell you, you're going to make money as a byproduct of doing something consistently and taking that thing as an habit, taking that thing as a routine. You must follow the plan. You must have a daily plan that you are following. It must be in front of you. You must be looking at it.